that word cash flow with 20% down in Toronto, very difficult to do. I would say impossible to do. And that was at rates at that current time, not even talking about rates today.
Alex,
So
welcome to
weird.
the show.
Hey guys, how's it going?
How are
It
you?
is going good. How are you?
Good.
Good to meet you. Thanks for joining us today. We're
Yeah, of
just
course.
chit-chatting a little bit here about real estate stuff, a bunch of stuff we barely understand. But we figured we'd chat with you
Generally.
today to see what you got going on. Why don't you give yourself a little introduction?
Yeah, so first of all, I'm jealous I'm not wearing my hat. I do have a hat. I just didn't grab it this morning. But my name's Alex Wilson, broker owner of Remax Wealth Builders Real Estate. I operate here in Toronto and Calgary. Been selling real estate for 15 plus years, but on top of that, I'm a real estate investor, have 19 properties worth over $20 million. And what we focus in on is advising people on buying and holding real estate and using real estate as their self-built pension fund.
The
So
wealth
that's,
builders.
yeah, that's what we
Wealth
do. We
builders.
build people's wealth.
So
Maximize their wealth and minimize their stress is what we preach.
this
It's a
this
tough
is going to
job.
be interesting. And in Calgary, in Toronto and Calgary. Love
Toronto
it.
and Calgary. So I can give a background on that. So I've been selling real estate in Toronto since '08, been investing in Toronto real estate since 2012. First condo I bought in Toronto was $267,000, did it on a deposit of 36,900 in and around there. And it cash flowed with 20% down. Closed on that in 2016, refinanced that property, bought more properties, continued to build the portfolio. The issue was that once we started getting around, well, even before that, but let's say around 2019, that word cash flow with 20% down in Toronto, very difficult to do. I would say impossible to do. And that was at rates at that current time, not even talking about rates today. So it's not that Toronto became a bad spot to invest. It just became a different game and a different level investor that could do it. It was wealth-based individuals that could invest in Toronto, or people that were looking to preserve wealth, looking to invest in Toronto. The idea of typical real estate fundamentals of put 20% down and generate positive cash flow didn't exist. Now we're just strictly relying on appreciation of the asset, unless you're putting 50% plus down. Again,
Those are my
nothing.
favorite pro formas, the ones that include all of that appreciation as a line item.
Yeah. Well, and
Genius.
Toronto, for people that want to look at just having an asset and having an asset in the city for wealth preservation and looking and owning something, like let's call it like gold. I would say that Toronto is more like gold in regards to it's a hedge for the rest of your portfolio, that you could have something in there. And I've met people in New York City and Miami, and where they're in markets where you have to put 50% plus to cash flow as well. So Toronto's reaching a world-class city level in regards to what you need to do to own real estate here. Now, 2019, what does that leave the mom and pop investor, that just person that really wants to get into real estate investing, but can't afford to put 50% down? Or if they're just strictly relying on that appreciation, they're like, hey, I'm going to put 20% down. I'm okay with that. Well, I don't believe in putting yourself in a situation where you have to sell, because that's when you lose money in real estate. So if you're going to be in a situation where you're taking significant negative cash flow, then you're putting yourself in a position where you have to sell, especially if you're a mom and pop investor that's trying to grow a real estate portfolio that will in essence be your pension fund in the future. So that drove us to Calgary in 2019. And the beautiful thing about Calgary is you talk about appreciation. When we first started promoting investment in Calgary, people were like, well, it's been the appreciation year over year. I'm like, oh, it's negative. It's been going down. I'm like, what? Then why are you investing there? I'm like, that's why I'm investing there, because I'm buying somewhere where I'm viewing it's the bottom of the market, because it's just the lack of affordability that existed in Ontario at the time. And again, this was 2019, before the craziness of COVID. So that's what drew us to Calgary in regards to the fundamentals were there for cash flow positive properties, upside on appreciation, has positive population growth, positive economic growth. And then
with 20% down?
With 20%
with
down.
20% down? Okay.
With 20% down. Yeah. And bonus, They don't have the arcane landlord and tenant laws that we do in Ontario. So there is no rent control, which again doesn't impact me as much because a lot of my portfolio was new build. So most of my portfolio personally isn't subject to rent control. But number two, and I think I really like, and I think it's more important to me, it has fixed term leases, which then allows a clean exit strategy of the asset. And what I mean by that is, if I were to sell a tenanted property here in Toronto, the tenant has all the rights still.
Yeah, they can
And
stay even when the lease
they
is up.
can stay.
It's
They can
the
stay
best.
after the lease is up. Then you're going month to month. Then it doesn't mean I still can't sell it. I sell it, and then if I sell it to a buyer, and that buyer legally submits an N12 intention to owner occupy the unit, and we come up to the date of closing, the tenant doesn't have to leave because the tenant could file agreement to landlord and tenant board, and it could be 12 months till the board sees them for their grievance. But I have a transaction that's closing at that time, but it doesn't matter because the tenant won't leave. And then that causes an issue. So what does that mean? It doesn't mean that asset isn't sellable, but it means there has to be a discount on the sales price. Whereas when I have a fixed term lease in Alberta, I decide I want to exit the asset and my lease is coming up for renewal. I just say, okay, when we're not renewing the lease, tenant would then move out and I could stage a property, make it look great, and then maximize the return on the investment for the individual. So for me, I love the fact that it's fixed term leases out there because I actually control the asset. And if I want to take the asset back, I can. In Ontario, the only way to take the asset back is if the owner is moving into the property. And then even then, and I've even personally experienced myself in 2016 when we bought a property with the tenant and tenant said, no, we're not leaving, and had to bring a paralegal involved. And we did get the property, but it's a hassle and it's stress.
Like, comment, and subscribe if you got anything from one of these clips. And if you want to see some more, press something on the screen here. Boom.
That was good.
That was good. I like that. That was good.